Listening to Nvidia CEO Jensen Huang talk about why businesses are choosing to upgrade their data centers gives great insights. The evidence of Nvidia's success can be seen clearly in the company's soaring revenue growth with several consecutive quarters of year-over-year increases of above 100%. Now, the flip side of such excellent growth is the durability or persistence. The short answer to those concerns is that Nvidia's growth rate is sure to decelerate. It's not reasonable to expect above 100% revenue growth for any extended period of time. And Nvidia's growth rate already has decelerated. Nvidia itself has forecasted revenue growth in the upcoming quarter that will be the first with less than 100% year-over-year increase. Thankfully, Nvidia doesn't need to grow at those astronomical levels for it to make a good investment. Now let's see how Nvidia CEO describes demand for its products to gain more insights into the drivers for those purchases. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now. Right, so this is Jensen Huang himself in answering a question to Wall Street analysts on August 28, saying that when they, referring to customers, build out Hopper-based infrastructure and soon Blackwell-based infrastructure, which are NVIDIA's latest generation technologies for accelerated computing, they start saving money. And the reason why they start saving money is because data processing saves money, and data processing is probably just a giant part of it already. So what the CEO is saying here is just from the savings for internal workloads already, these companies save money. So you think about a company like Amazon. It has enormous computing requirements to operate its own business, its recommender systems for its website and app, and everything with Amazon Prime Video and Twitch and all of its other businesses. The computing requirements are enormous, and it costs the company power to operate those data centers. But when they switch to a Hopper-based infrastructure or a Blackwell-based infrastructure from NVIDIA, it will save them costs in energy consumption. The energy consumption will be decreased. And so already those are cost savings for internal workloads without even discussing about renting out that infrastructure to their cloud computing customers. And so the second thing here is everything you stand up are going to get rented because so many companies are being founded to create generative AI. And so your capacity gets rented right away, and the return on that investment is really good. So if you have leftovers where you've bought and you've created so much infrastructure, computing power that you have left over that you can rent out, those leftovers, whatever capacity is available, gets rented out very quickly because of all of these companies that are being created right now that are being founded to create generative AI. And so you're getting that rented right away. And so these companies are seeing that. They're not just buying NVIDIA's infrastructure and upgrading it because they're hoping that something is going to come to fruition 2 years from now, 5 years from now, 10 years from now. It's not based on hope. It's based on tangible orders. It's based on tangible evidence of cost savings or revenue generating opportunities. It's right here, right now. And we're not even talking about all the potential opportunities that could open up in the future. That's also just an option for upside for these companies. And that's why you're seeing such phenomenal demand for NVIDIA's infrastructure, where tens of billions of dollars are being deployed in this category, and NVIDIA's supply can't even keep up with the demand. The CEO goes on to say that in the past, no GPUs were in data centers. It was just CPUs. But in the future, every single data center will have GPUs. And that's right in NVIDIA's wheelhouse. NVIDIA's main competitive advantage is in GPUs. Although it is now starting to offer CPUs as well, its main competitive advantage is the GPUs. In fact, the whole ecosystem it provides around accelerated computing. And so this will continue to drive down the cost of computing so that when we do more computing, You're not experiencing computing inflation. You're not seeing the cost increasing, and especially not increasing at an increasing rate. The next $1 trillion of the world's infrastructure will clearly be different than the previous $1 trillion, and it will be vastly accelerated. So it'll be based on GPUs. It will no longer be based on CPUs like the first $1 trillion of infrastructure was based on. And if you look at NVIDIA's revenue in the last year and a half, it hasn't been anywhere near 1 trillion. And so you've got all of this infrastructure that needs to be upgraded and modernized with GPU-based technology, where NVIDIA has an estimated 80 to 92% market share. And when you look at these figures and when you look at these estimates and when you look at these reasons why people are buying these products, you can start to feel a little more comfortable that NVIDIA's growth will continue, will persist. Now, you have to be careful and not expect that growth to be 100% or 200%, but it will likely continue growing because it does offer best-in-class service in this category, and the category is experiencing a massive tailwind where it's so much better than the previous generation technology that investment is coming, and it's coming rapidly and tens of billions of dollars at a time. And so it's right in position to benefit from that. Now, the company goes on to say that with respect to their ramp of Blackwell, which is the newest one that's coming out, they have two forms. They have the Blackwell Classic and the Grace Blackwell. And notably, liquid cooling is cheaper, and the Grace Blackwell has liquid cooling, whereas the Blackwell Classic is air-cooled. The liquid cooling has a lower total cost of ownership, and liquid cooling allows you to have the benefit of this capability they call NVLink, which allows them to expand it to 72 Grace Blackwell packages, which has essentially 144 GPUs acting like one GPU. And that allows the vastly superior scale in computing power and the lower total cost of ownership. Simultaneously, you're getting both things. You're getting lower total cost of ownership, and you're getting greater potential, greater capacity at scale. And when you look at all of these benefits, when you look at all of these advantages, you can understand that it's a no-brainer for Amazon to spend tens of billions of dollars on this latest generation technology. You can understand why Alphabet will spend tens of billions of dollars on upgrading their data center infrastructure. You can understand why Microsoft will spend tens of billions of dollars in upgrading their data center infrastructure. And so the drivers behind this sales growth are tangible already, with the option of new use cases that could come in over the next couple of years that could drive the next leg of growth higher for NVIDIA. But for now, these drivers will persist for the next at least 4 to 8 quarters. Revenue growth will no longer be above 100%. It should slow down, it should decelerate, and that's okay. But the good news is that revenue will not come back down. So it's not like revenue spiked higher for NVIDIA, and then once these businesses have completed this couple of quarters of investment in improving the data center, that it will be it. No, NVIDIA will continue innovating, right? They've got the Blackwell coming up, and then they've got the Rubin technology coming next year. And these step improvements will be further catalysts for these companies to continue investing in the infrastructure, because with each new cycle that NVIDIA delivers, it offers more savings and more computing improvements. So with the GPU, unlike the CPU, where the innovation for CPUs had slowed down to a crawl, where it wasn't even worth to upgrade because the next level upgrade was, the improvement was de minimis. But with the GPUs, NVIDIA is still innovating at such a massive rate of improvement that the upgrade for the next level is still worthwhile, and it's likely to remain worthwhile for at least another 2 cycles, which is the Blackwell and the Rubin technology, from what we've heard from analysts and industry participants. And that's all great news for Nvidia stock investors. Before I let you go, let me tell you about the greatest deal on YouTube. With just a click of a button, you can get free financial analysis from a professor with decades of investing experience. So what are you waiting for? Hit that subscribe button, and I'll see you again soon.